Morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call, 20th of January, 2026. My name's Mark Gardner. Index futures, obviously Martin Luther King Day in the States overnight, public holiday. Stocks were shut, but futures were still open. We saw, obviously the heat maps absolutely irrelevant for today, closed for MLK Day. So just the numbers here in red. So the Dow was down 0.8, the S&P 500 was down 0.88, and the Nasdaq down 1.1, and the Russell down 1%. First negative day for a long time in the Russell. We saw China A50 and the Hang Seng fall away yesterday after Chinese GDP numbers. Despite the fact that they met that 5% growth mark, which the PBOC's been trying to hit for quite some time. We were probably lucky to get away with down 0.3 yesterday in the ASX, just on the back of those futures falling away pretty hard. So this is all, look, the litany of uncertainty here is, well, it almost deserves a list, to be honest. So essentially, Trump's threat to impose 10% tariffs on 8 European nations over their opposition to Greenland, which with the rate set to rise to 25% in June if no deal is reached. So if those tactics feel familiar, they're exactly the same tactics that he used before he chickened out on 150 odd trade deals back in April, sort of April through September last year. What has ended up happening though is the EU's got together an emergency summit in Brussels, and sort of said, well, not sort of said, in no uncertain terms, has said that this is economic blackmail, and essentially that they would restrict US access to European investment banking and services and install tariffs of their own, basically a large retaliatory tariff package to combat what they called anti-coercion. It's very European to have these proper names for it in a world of Trump. So add to that, Supreme Court still in discussions that whether Trump's tariffs are actually legal. So that's still going on in the background, and then the federal court is still discussing and debating whether his attempt to fire Federal Reserve Governor Lisa Cook is legal. Uncertainty is probably not a strong enough word. Hence why we've had gold, silver, and platinum rally, and those sort of real assets. Even the euro rallied on the back of people wanting to get away from the US dollar. Gold made a new record, silver made a new record, bounced 6.5% last night. Copper was up 1.28, but that was probably more on the back of the Chinese data than it was anything else. Copper's sort of struggling a little bit here at the moment at the $6 mark. I think it's a massive buy in momentum. However, it can be a bit of a dangerous game buying copper, for breakout highs traditionally, particularly after being up about 45% last year. But platinum was up 2.5. That's probably the one that we'd start to look at. I think we'll start to play catch up with gold and silver, and it's probably a decent opportunity at the moment. Iron ore drifting around, but I expect probably higher iron ore prices over the course of the day with China's economic numbers improving somewhat. Uranium was obviously shut. That's the URA ETF. But Australian uranium stocks yesterday had an absolute bumper. We had Boss Energy up like 12 to 15%. I think Paladin was up not quite, but pretty similar, busting through $12 yesterday. Bitcoin drifted off, really not, probably showing, there was hopes that Bitcoin was going to show that store of value maturity, but it still probably sits in the risk asset basket, a bit more than most. As you can see, the US dollar or the dollar index down 0.33, Aussie dollar rallying a bit. I'm a massive fan of the Aussie dollar this year. I think we're going to have a recovery in China. And I think people are just going to, you know, like abandon the US dollar like it's got the plague, basically. Particularly with those litany of different things that are going on there at the moment. But this week, or tonight particularly, Netflix is going to be reporting one of the big, the old Mag 7 is part of that. That'll be very much watched. They've got all this Warner Brothers thing going on as well. 3M might be interesting from an industrials point of view. Johnson & Johnson tomorrow night. Intel, Procter & Gamble, GE Aerospace and Intuitive Surgical later in the week. Final GDP and then PCE, which is just missing off here because it's just been a little bit hard to get US economic numbers, some concrete numbers, but it is coming out on Friday, PCE, which is the Fed's favoured inflation number, and Aussie employment on Thursday will be the main events. Freeport McMoran, from the copper standpoint, might be an interesting lead into BHP earnings as well. And Rio earnings. So we'll probably be watching that relatively closely as well as the week goes on. The boys will have the Global Alpha podcast out today. Just with Martin Luther King Day, we just decided to leave it a day. So that'll be out today. It's normally out Monday. But I think they're going to be chatting about, the week ahead and the earnings season coming up, I believe. I dare say there'll be some Trump in there somewhere, as there is normally. Bit of a new initiative here. I'm going to attempt, and this may fail miserably, but because God knows what Trump's actually thinking or actually trying to do. But I'm just going to try and, with the amount of blitzkrieg announcements that's coming out and the amount of news stories you've got to get across, essentially, and we've had a lot of good feedback on, Kai did a really good piece and our Bulls versus Bears podcast on Friday, which was released over the weekend, was, what it actually means for markets, essentially. So he says a lot of things and look, based on the tracker from his last presidency, less than 20% actually come anywhere near a policy. But we're just trying to translate what's sort of going on from a base thing. This will be, look, this is, I'm not a mind reader, and I'm fully expecting pushback from, the fans of POTUS because, some people are, obviously will disagree or agree. It's just really, this is just my opinion. So, keep the hate mail for later. So basically he's threatened these tariffs. He's linked them all to national security, Greenland strategic value. He's trying to defund NATO anyway. So, annoying the Europeans doesn't really bother him in the long term. And look, and what he's probably trying to do here is, look, we went through this, and do yourself a favour, go and watch Bulls versus Bears. Kai and Jonathan give a really good, it's a bit of a geography lesson, really, of why Greenland's key in terms of military positioning, and a much better explanation there. But it is very important in terms of, particularly with melting ice caps. There's a few more places you can get. You can get a ship through that far up in the Arctic Circle. Natural resources, the island's very rare earth, minerals rich. There's been a scramble for rare earths, scramble for critical minerals, and then that can obviously reduce dependence on foreign suppliers, i.e. China. And Brazil and Russia, basically BRICS, Brazil, Russia, India, China, South Africa, and just his general deal-making leverage, which is, we've seen that, what they call the taco. Trump always chickens out. It's just basically, he starts with a high watermark, with a big threat. He gets a reaction, meets somewhere in the middle. It's like, he's sort of using his real estate tactics, from a long career in deal making, to essentially, in global geopolitics, which, could be a touch more consequential than real estate deals in New York. So, and then this part is I'm going to give you investable ideas essentially. So this all will very much disrupt NATO overall. I don't think there'll be any tariffs. Tariffs are dumb. Every economics book in the world will show you that. It's just the only stick the guy can wield. But what it means is that the key relationship between the US and Europe is NATO. And the EU is between a rock and a hard place essentially. You're choosing between Donald Trump or Putin. And as much whatever you think about Donald Trump, I think most people in Europe are picking Donald Trump 9 times out of 10. Because obviously the move into Ukraine, etc. If NATO breaks up completely, that's a rare but possible tail risk. Europeans are going to have to increase defence spending. If NATO remains intact, European countries will have to increase defence spending because Trump's already said he's going to start to defund it, and they can't rely on the US anymore. And if NATO's credibility declines, each European country is going to boost its own defence spending. So this whole thing really, I don't know whether it's necessarily a critical minerals play. Obviously, the obvious investable ideas is gold, silver, platinum. Particularly, platinum is 96% produced in South Africa and Russia. Same with palladium. There is increasing industrial use, so they're probably going to be, if there's heightened geopolitical risk, they will likely play a fair bit of catch up. But that's a fairly obvious trade. It's already well on its way through, but these ones, these European-based defence stocks, you can look at the likes of RTX, which is US, but you can probably, it's got a lot of European exposure. You've got Leonardo in Italy. You've got Saab in, I believe, in Sweden. You've got Rheinmetall in Germany. You've got Bay in the UK. There is a whole bunch of different ones there. DTEC's probably the better ETF as far as an Australian standpoint goes. They're the sorts of things that are going to see increased. If you're looking at Australian defence stocks, EOS, ELS, and Drone Shield, really the only ones with European exposure. Drone warfare, etc., is going to be, is increasing. So they're probably, but I will say though, Drone Shield and EOS at the moment, an extraordinarily nosebleed section in terms of valuations. So, I'd be wary buying up here at the moment. Obviously, if you want to keep up to date with this and get all of our recommendations, we've been on the European defence thing since sort of early last year. We've been on silver and gold for 18 months or more now, platinum as well. You can follow us at MPC Markets on Spotify, YouTube, Apple Podcasts, or all of our content, podcasts, news, and stock picks are all in one place on our platform Mosaic. For clients as well, it's got all their portfolio and everything in there as well. It's your one-stop shop for all your investing. It's super convenient. Stock picks come to your phone, push notification. Same with the podcast or whatever. You get a 1-month free trial at the moment with all of the recommendations. That's only lasting until the end of January. So go to mpcmarkets.com.au/mosaic, get your 1-month free trial, or you can go to mosaic.mpcmarkets.com.au and sign up by yourself if you like. Recommendations are very reasonable. $149 a month for platinum, way less than half of what most people. What most of them are. Webinars as well. You can go to mpcmarkets.com.au/webinars. My market outlook, which has been extremely popular, has got one of our highest viewings. Goes for about an hour. It's free, and it's all your investable ideas for 2026. Quite an important one. I think this year. I just don't think it's going to be, just a grind higher. I think there'll very definite need to be doing your homework this year. I've spent quite a significant amount of time on that at the end of last year, and we've got 5 themes and actionable stock picks in that webinar, so you can go to that address down there. But as far as the ASX goes, I dare say fairly quiet day, and unless there's more Trump announcements or retaliation from the EU. I hope everyone has a great day, and we'll speak again tomorrow. General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.